All right, you guys, welcome. Doug McKay on the 2nd of December, 2011. Looking at a daily chart of the S&P 500. Obviously, a really big move on Wednesday. I believe the futures were down over 11 points on the S&P prior to the EU news. But in any event, we did close above the 50-day moving average. We did close above the 30-day moving average and resistance at 1228 and the lower level of resistance at 1200. However, at this time, for the record, we still have the overall trend as down. We will also pull up a weekly chart here. The main reason for that is we are still below this downward sloping trend line on a weekly. On a daily chart, we would like to see if we're going to get long here on a daily chart for this to turn out to be a cup and handle, where we have the cup formation here. Maybe we build a handle and then we get above this area here, and then also above the downward sloping trend line. At that point, we would look to get long. But as it stands right now, we're going to hold tight either short or in cash. For the managed account purposes, we are in cash. When we open this up to a monthly chart, which is where this trend, or I'm sorry, a weekly chart, which is where this trend line came from. This is what we're looking at this time. You cannot see the 200-day moving average on the daily chart simply because Free Stock Charts doesn't have it. But we are still below the 200-day moving average on the S&P 500. As a matter of fact, we traded through it intraday today, only to close below it. So we'll see what next week brings. We would like to see the S&P 500 get above this level here, and for starters, above the downward sloping trend line. When we take a look at the Qs, we would probably like to see a close above 59. And again, very similar pattern where we would like to see this, if we're looking to get long, come up to here, trade sideways in some type of handle, and then close above 59 on volume. So far that has not happened. So we don't know if this is a bounce that's going to turn out to be a trend changer or not. The Dow looks a little bit better. We did close above this downward sloping trend line on a daily chart, and we are also above the 200-day moving average on the Dow. If we were to take a look at the diamonds, this is what we're looking at here. And again, you can see that we could be building a handle here. But until we build a handle and break above this area of resistance out of the cup and handle, we will remain on the sidelines. For the bulls, we do have some, I'm sorry, for the bears, the only pluses at this point is we do have some downside gaps that could be filled. Obviously, there was a big gap that was put in between Tuesday's close and Wednesday's open. Let's take a look at gold. Neutral on gold at this time as well. Again, this has really no direction. You can make a case for the fact that it's above the 50-day moving average, which is this blue line here. But by no means is this a signal to get long gold, in my opinion. It's a very similar chart pattern where we're almost building a triangle of sorts, a longer term triangle, and we are still below that triangle, meaning the downward sloping trend line of that triangle. So right now, you guys, pretty much sitting on the sidelines. We're looking at a couple stocks. We are looking at the dollar, the UUP. We are looking at Verizon. We're also looking at IBM. But let's see how next week plays out. And again, we'll finish back with the SPY. And this is a daily chart. We just want to make reference to these gaps in addition to the downward sloping trend line. Good week if you're long. I would have my stop at 120 if you are, but I would wait for more confirmation to get long if you're in cash. All right, you guys, Doug McKay, antiwallstreetguy.com. We'll see you next week. Thanks.